GM, welcome to Altcoin Analysis, where I analyze your favorite altcoins. Let's get into it, starting with Solana. So, since last altcoin analysis video, this was the chart that I mapped out for Sol. I said that this zone over here between $100 and $126 is an area where you've seen Sol bounce before previously, not just on a couple occasions, but actually multiple occasions. So it's no surprise to see the place where demand has been found before is providing some sort of bounce again this time. But the only caveat to that is the more times a zone gets hit, the weaker it becomes. So while the expectation is for Solana to bounce at this zone here, because it has done many times before, invalidation for that is simple. If we start closing below $100, so that psychological level, I would then expect Solana to be moving into something different, which could be what you call as a bear market, depending on how you define it, where it starts to fill in some of these gaps over here from this markup and perhaps back to this accumulation zone. Because what I've got mapped out on the charts are all of the accumulation zones and all of the distribution zones currently on Sol. While this zone holds, all good, we can push up to the distribution zone, and this would then be the zone for bulls to flip and invalidate this downtrend right here. If we can get above the yearly open, which confluences with this distribution zone between 169 and 189, then I'd see Sol heading up to the next distribution zone at 237. And that goes all the way up to 260, which is the previous all-time high, which Solana has done its heavy distributing at. That's where it's peaked at this cycle. Exactly where it peaked at last cycle. Those same sellers have shown up in force over here. So there's clear zones that you need to flip on Sol, and there's clear zones that you need to hold on Sol. And that's what I'd be looking at in terms of Solana. When we look at any trend bands on Sol, take something like the 12 and 21 EMA bands. You can see they're red right now, but they've been going green, red, green, red. So what does that denote? Well, that denotes mean reversion conditions. Sol is simply in a range here. That's why those trend bands aren't providing any signal. When we look at something slower moving, like the 50, 100, and 200 week EMA, well, now we can see the trend support. And that has been the 200 week EMA, although it didn't create a new high on Sol. So expectations are for, yes, a bounce on low time frame, and these high time frame levels can be amazing to scalp around. However, you can't say it's your trend support since this didn't produce a new high. So that's yet to be confirmed. If Sol can make a new high, then sure, the 200 week is your supporting trend here. And again, break below there, start closing below the 200 week, which it hasn't done all cycle, then that can be your early sign that maybe we are going to lose 100 and head towards some of these lower levels. So that's what I'll be looking at. We're bouncing from the area you would expect it to bounce. Play the zones as they come. If you're scalping low time frame, you can trade it from the 200 week to the 100 week, that red line over there. But overall, those are your high time frame levels on Sol. And when you go to the daily, you can see it really just is in a downtrend. Lower high, lower lows. This is textbook downtrend, and to stop downtrending, well, it needs to actually bottom out, build some sort of base, which it maybe is doing here. Except instead of breaking to the downside of this base, like it has in all these previous consolidations, break to the upside. And that can trigger a move back towards some of these gaps over here where lots of short stops will be building up. So watch to see which side this breaks, I'd say, in this mini box on those lower time frames. That would be my bias for Sol. Let's move on to SUI. So, very popular coin this cycle. Start off with the weekly. So these were some paths I laid out on last video, I believe. So what I mentioned at the time when we were actually back here on SUI, I said, look guys, if SUI's so amazing and SUI should go above $5 again this cycle, above $6, above $7, I said right over here, let's at least see it get above 4.29 then. You don't need to guess. You don't need to overplay your hand trying to predict the market and tell it what to do. If it's going to $6, $7, $8, $9, $10 like all of the predictions out there, then it's first going to have to flip 4.29. And we didn't get that. So that's exactly why you've got to wait for some sort of confirmation, because instead what happened is we got pretty much a down only path. We didn't even get any exit bounce over here. What I mentioned, this green path would have been, can we see some reaccumulation? Haven't got that at all. So really, you're just looking for the same thing on SUI that I mentioned over here to occur at current price. You just need to see this sideways action where price goes in a box, like over here, sideways price action. This is when smart money accumulate as it's boring, low volatile. They corner the supply, they buy up all the supply before it then marks up and gets retail excited. That's been the game of markets forever now. And smart money, they need to start showing signs that they are reaccumulating like they did here. And that starts with price stopping going down for starters. We're in a downtrend. You can clearly see that if you take on, again, something as simple as the 12 and 21 EMA bands, they're clearly red. Price is going down. And price needs to, first of all, stop going down if it is going to bottom out and reaccumulate here. Otherwise, you expect it to continue going down. But the closer we get to the bottom of these October 10th liquidation day wicks, the better the risk to reward does actually become for alts. And I wouldn't be surprised if we do get something like this green path for SUI. If it is going to be bullish, this was how I'd expect it to be. Of course, nothing's promised. Maybe it does just continue bleeding. Who knows? But if it is going to be bullish, this is the area should start reaccumulating at, because this is a previous demand zone. And that's between 0.45 and 1.15. So maybe we have another push lower to go, and then that's when we actually begin the sideways box action over here. And that's when smart money start reaccumulating again, because why would they continue selling if it's back at their entry, right? Simple logic. And that's what I'd be looking at for SUI. It's not going to run up on you. I mean, maybe we do just get a big short squeeze, but if so, then it's probably more likely to then just bleed lower and lower, because that's just a move to wipe out positioning, wipe out anyone with shorts, rather than reaccumulation and demand. So alternatively, you do have this orange path idea where if SUI's not going to show demand and reaccumulation, and smart money don't necessarily have an interest in cornering the supply, they're more interested in just exiting their bags, then what they'll do is they'll just create a short squeeze, because that then gives them exit liquidity, because all of those short stops, what are they? They are buy orders. When a short gets stopped out, it's a long, and that will then fill their sell orders up at decent prices and back at this potential distribution zone over here. So orange path is definitely on the table, but if there is demand, you want to watch for something like the green path where you see clear signs of reaccumulation, and that requires patience, because as I said, it's going down only. Daily's in a very violent downtrend. There's been no signs of price reversing this downtrend, so you've got to really wait. It is a pure waiting game. Daily bands, 12 and 21 EMAs are also bearish, so again, another thing you got to wait for, at least for these bands to flip bullish on this lower time frame to entertain any idea of a squeeze, maybe something like the orange path. But that's the overall levels for SUI. Most interesting area is going to be this previous demand zone. It's the bottom of the October wick that offers high risk to reward, and that's a place where people stop selling and they say, you know what, it's down so much, crypto always comes back, everyone always writes it off. So if it gets to that level, maybe that's a place where people are interested in bidding, and that's where we see it stop going down. And that could be an area of interest simply from a risk to rewards perspective, because the risk to reward there becomes greater. And it's certainly greater than, above $3, above $4, where everyone's been so excited to buy, right? If SUI is so good and it is the same, then at $1, it should be amazing to buy. That is the logic behind it. So that's what I'll be watching for. Keep in mind, orange path, short squeeze could play out. Alternatively, which would be less bullish, as that's just squeezing out futures positioning and forcing them out of the market, really. So next up, Cardano. Beautiful coin this. One of the first coins I bought. Lovely stuff. Well, we've got this base accumulation zone in the bear market between 0.23 and 0.32 that I've been highlighting. That's exactly where the October 10th wick went to. No surprise, that's where it found some demand resting there. Whoever's got orders there, obviously done very well. Not many orders would have got filled there, don't get me wrong, because there's barely any volume at the bottom of that wick, but interesting nonetheless how the technicals play out, and it comes right to this reaccumulation zone over here that I had marked out for some time now. You then have this interim reaccumulation zone, which we've clearly now just flipped into distribution. We're closing below it, backtesting it as resistance. So between 0.45 and 5.3 is the level, the zone to flip on Cardano. We've got to get above there if we're going to be looking at higher prices. And above there, we can target this order block over here, but work to do until then, because right now we are still below it. So this would be a weekly order block, an area of interest on any rallies, any short squeezes that maybe we get. Got to wait and see for that. Or much like what I said with SUI, you've got to see some sort of reaccumulation if it is going to be bullish. So weekly order book there, you guys can see that. Exact same scenario. If there's going to be demand for ADA and smart money are going to bid it up, then you're going to see this box, this sideways price action that we see so often during these bearish periods where everyone's checked out the market. I mean, what is this? This is a box right here. This is smart money accumulation going on. This is when the markets look like death, and it's right before the biggest rallies. Exact same box. Where does it appear? Again, right before the biggest rallies. It's no surprise. Cause and effect, Wyckoff law. Teach this inside the Discord. If you're not in the school, make sure you get yourself in. Drop me a message on Telegram, because this precedes all the big moves. So if we're going to get a big move on ADA and there is demand, you're going to see price go sideways like one of these boxes over here. And this would be the area really to flip, because this level is also a weekly gap fill over here. It's a previous demand zone. So question is now, if we don't go sideways here, and we actually maybe go sideways from right where we are at in current price, that's also a potential, then when do we break this distribution zone? As soon as we flip that, I'll be looking for trades to this weekly order block over here. But until then, weekly bands are red. It's in a downtrend, so gotta wait for price to do the work. Daily bands are clearly in a daily downtrend. Look how respected those 12 and 21 EMAs are. Anyone shorting on the EMAs, they're printing and have been printed for some time. So eventually that will change and these bands will flip green. And that can offer the alternative short squeeze scenario. Maybe bands flip green and then you get all of this move in one, but then it ends up rolling over and being bearish because there's no reaccumulation and no actual demand and accumulating of supply behind it. So that's the alternative path. And you'd see these bands just eventually flip green like this. And that's what can offer some maybe low time frame longs in that alternate scenario on ADA. So that's what to watch for. Risk to reward could become good, but it's all about price behavior and how price rises. Is it off a base, or if it's not, then is it just a squeeze of shorts is what you have to ask. So looking at TAO, bit tensor. Previous chart that I mapped out for TAO has been playing out pretty nicely. So high time frame range this chart has been in for absolutely years now. It's not been macro trending for a while. As you can see by this range, every time you get to the resistance, the premium zone, high risk to reward selling over here. Every time you get to the support zone, the discount zone, high risk to reward buying over here. Now, recently the buying has only managed to pump price as high as this 0.5, so the midpoint level, which is an early show of weakness on TAO. The fact that we're no longer able to reach this premium zone anymore. It's a sign that supply is actually showing up at lower levels. So bears definitely in control in this one. And I think, again, it's the same concept. The more a zone gets bid and works, the less likely it is to continue working. Because if everyone just constantly buys TAO for all of these big markups, buys TAO, big markup, and this just plays out for infinity, then everyone's going to be rich, right? Everyone's going to print trillions of dollars if that happens. But until then, expect that discount zone over here to provide some bounces, but bounces may get shallower and may only take you then to the 0.25. And the demand zone below that is over here. So 36 to 94.29 would be the next area that I'd look at on TAO if we do break below this zero level at 162. So not much interest in this chart because it is showing less volatility, more weakness on the bounces, and overall less movement, which isn't interesting as a trader because we need movement to trade these charts. So Monero. Of course, Monero has been very interesting, pumping with Zcash and all of those privacy coins. You can see, once again, cause and effect, Wyckoff theory. Price reaccumulates, leads to the big markups. Price reaccumulates, leads to the big markups. Over and over again, no matter the coin, no matter the asset, stocks, gold, anything. These concepts apply. Technical analysis works in all markets. That's why the technical analysis I teach, you can use it for stocks, use it for anything. And now that we're in the markup phase, you really have to follow your trend trade. So weekly bands have been green this entire time. We briefly went below them, but as soon as they reclaimed, that set up a beautiful rally. So are these the respected bands? Well, so far they have been. You can see price is wicking into them, producing a decent bounce at least. Not yet new highs, which it does need to do. But so far we're getting something like the green path, which I mapped out a couple weeks ago now. So what price really now needs to do is make a new high, make a new break of structure. And you can take that on a candle close basis over here. Or if you like to use wicks, you can take that on a wick basis. Price needs to start showing some strength, making some new highs and continuing this higher high and higher low, because every uptrend, right, is higher highs and higher lows. As soon as you stop making higher highs and higher lows, that's when you have potentially a downtrend. So market structure can be as simple as that if you want it to be. And that's why with TAO needs to break above 436 on a close basis, or 470 if you're taking a close above the wick for your break of structure. Either or, that would then map out the green path and likely have those weekly bands being respected. Otherwise, weekly bands get disrespected, then maybe you're looking at something like the orange path where it needs to reaccumulate, like one of these big boxes over here, and that could potentially set up a move for later on. Of course, invalidation of all these paths would be breaking below this blue box. Then you're looking at downside on TAO, as that confirms this. Instead of a reaccumulation, it confirms this as distribution. It means smart money using this box as areas to fill their exit. So that's the ultimate invalidation of TAO. You don't want to see it really close below this break of structure at 244 over here, if not the blue box I've just laid out. That was an area we retested. Bulls defended it. So if they don't defend it again, that's your sign that sellers are in control. But until then, green path, maybe weekly bands get respected and wait for your breaker structures over here. Otherwise, if the weekly bands fail and you see price actually go below them, maybe they cross red like this, then you're going to see something potentially more like the orange path where it needs to go sideways, reaccumulate for longer, build that cause and effect before a rally higher. And again, you're just then waiting for the same signals, break of structure, either the wick or the close basis. And that can set up your trending moves. So that is altcoin analysis, guys. Appreciate you all supporting the channel. Almost 600 subscribers. Absolutely G what we've done in just 2 months, really. Hope you're all having a great weekend, and I'll see you guys in tomorrow's weekly outlook on Sunday night for a high time frame view of the markets. GM.